All right, Evan, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. Starting off the S&P 500, we can see we were down 2.25% today. It is Friday here. We were down over 2% on the week. And this was on new variant fears out of South Africa. So markets getting crushed here. And over 110 million shares traded on the SPY on a holiday shortened session. So 100 million shares is very high volume on the SPY. Regardless. And then to do that in a half-day session on the SPY is pretty remarkable, especially given that the Friday after Thanksgiving is typically one of the lightest trading volume days of the year. A, because it's a half day, and B, because it's around the holidays, where most institutions just take off and they don't really even go into the office. So major selling across the board here. Let's take a look at the triple Qs. I talked about this last week. This little MACD here. Every time we get to this top side trend line, we have a reaction off of that. And earlier this week, I said that the triple Qs probably have topped out. I actually called the top, went on record there. And so we probably declined to 370 by the end of the year. And that is starting to happen now. We're seeing the MACD start to cross over. Now, it hasn't completely crossed over the blue line through the tan line yet, but it is starting to curl back down, and it is making a reaction off of this trend line again. So we are expecting some lower prices here. Not just in the NASDAQ, but in the overall indices. Now, the NASDAQ may actually hold up a little bit better if bonds continue to yield off of, bonds continue to bid off of the variant fears. So that would be good for stay-at-home stocks, semiconductors, stuff like that. That's why we're seeing the semiconductors really kind of hold trend here. So semis SMH down 3% today and still holding that 20 moving average. So we may see tech be a little bit of a leader, at least for the next couple of weeks, if the lower yield remains the theme for the market here. But ultimately, major declines in the market. So let's flip over to crude. So crude got crushed, down 13%. A lot of this is probably margin selling and so on and so forth. But cutting through that 200 moving average on the daily time frame, and it was getting a bounce here off that 75 handle. I did think that we had a good shot of getting up to 90. So if we take a look at the weekly here, we actually had a nice bounce off that 20 MA. We had a little pullback here, and then it looked like it wanted to push higher to that 90 handle before ultimately satisfying that price target. And that's where I had it really stalling out. But obviously, with the new variant fears, that's throwing a wrench into everything. And crude really just cutting through all of October's gains. We talked last week about the OIH, how that was lagging. That cut through all of October's gains, even by last week, and that was down over 5% today. XOP down 6.5%. XLE actually holding up reasonably okay comparatively, down 4%. But you have stocks like Exxon, Phillips 66, and Chevron that pay dividends. So those may be getting a little bit of money flow as they are safe havens. You had stocks like Verizon and Unilever that finished green today. Those are some dividend kind of safe plays. Clorox, nice little pop there on Clorox actually today, up 3.5%. But overall, crude just really pulling back hard here. Let's take a look at the weekly. So we do have the weekly 50 MA. This is also where you broke out. So this will be good support near term, but it's going to be very important to see where Monday opens up just in the broad market. We could have a gap down in the market, and that could cause crude to, really flush down to the 67, 58 handle. Or we could, fears could calm over the weekend, and we could get a bounce here. So it's very tough to say. I know this is a good level here for crude, technically, but, what happens over the weekend is going to dictate what this market does. The one area that was really strong today is nat gas. So nat gas up 7.5% here. Really just ripping off of that and closing above this red bar high here. So nat gas is showing a lot of strength. So I've been kind of neutral on nat gas over the last week or so. Next test for this would be $5.66. If it can close above that on a weekly basis, this thing rockets to new highs. But nat gas showing some strength, so it kind of just was flirting around, had this kind of bearish inside bar chop here. Was kind of holding onto the 100 moving average, had this little trend line, and now it's getting a boost off of that. So nat gas is showing some strength, and that may be wanting to make new highs again soon. But again, your weekly area here to watch is going to be right here at 566. So if we can close above that by next Friday, or on next Friday rather, that will probably test the 650 handle. So nat gas showing some really good strength here in the energy sector as crude sells off. Let's move on here to gold. So gold getting a hit off of this trend line here. So we talked last week and we said it's probably going to pull back a little bit. It's not just going to go right through this level. I didn't think it would get hammered as much as it did, but it is holding up off this trend line, and with bonds bidding, that's kind of helping gold, but it did give back a lot of the gains. You know, you wanted to see gold kind of reclaim that 20 moving average, especially with the 10-year yield down almost 10% here. That is, you know, supposedly bullish for gold, but gold really kind of giving back a lot of those gains, kind of just hanging out here. Now, some of this may just because there was a lot of dumping and everything was just getting hit. You know, for instance, back in March 2020 or February 2020, gold got hit, and then it got bid. You know, margin calls, you know, have to be satisfied, and gold can be used to sell margin or satisfy margin calls. It has been done in the past. So sometimes you see those knee-jerk reactions in gold before it rallies up. But in any case, you know, we talked about being kind of cautious here. We didn't want to just jump on board here at the end of last week for a potential move higher. We wanted to see the pattern play out, and that turned out to be the right decision as gold is pulling back sharply. Silver pulling back even harder here. It's going to have some support around 2280 here. Basically kissed that today, but we'll have to see the pattern shape up. This is a pretty nasty sell-off here. Platinum also coming back pretty sharply here. That is retesting this prior breakout area. So this is where you broke through. You should have broke down and then you reversed. So that will be support. We're getting right into that now. Palladium, on the other hand, that is testing new 52-week lows. So if we pull the chart back here, you haven't really been here since March of 2020, really. So March 7th right there, that's the low that you printed today. So palladium selling off in a major way. Now, palladium was at $3,000 an ounce really earlier this year, and now down to 1,700. So quite a precipitous fall here on palladium. So let's take a quick peek over at Bitcoin. This chart is tracking Bitcoin volatility. Notice every time we have these kind of dips here in the volatility of Bitcoin, there is a rally after each major decline in the volatility of it. And if you look at the technicals of Bitcoin here, you can see that we have this upsloping trend line. You also have this prior pivot high that you broke out of, and you have the 100 moving average here on the daily. So there is a good amount of support right in this area, around 54,000 on Bitcoin. And you know, that would kind of coincide if we do have this this decline like we're seeing, minus 15, minus 20%, this little bit of a dip here, that could end up being a bit of a buying opportunity for Bitcoin. I do think Bitcoin is intriguing in this area. So that is one asset that has held up really well. You know, it has, you know, it did sell off like everything else did, but technically from a technical position, this is actually, you know, in good shape. It's not, you know, it hasn't broken through any support. It's actually in a decent uptrend, and it is into a nice little trend line here, as well as these moving averages and this pivot high. So Bitcoin actually holding up pretty well, something to keep on your radar in the future here. But to wrap up here, so as far as the equity markets are concerned, the one things I want everyone to pay attention to is the IWM, Russell 2000. If it can hold this trend line, if we don't, assuming we don't gap down and have a Black Monday, you want to see the Russell hold this trend line, and more importantly, this pivot right here, so at around 208. If that can hold up, this market probably holds up. Now, we have to take a look at the VIX, and I know I get a lot of questions about the VIX right now, but this is the other thing everybody needs to watch. If that 29 handle holds, meaning it cannot break through that, this market can remain buoyant. But if the VIX gets above 29 and shoots up to 30, this market is in serious trouble very, very quickly. And it will get ugly. It's not going to be a little 5 to 7% little pullback. It'll be a major correction. If we break through that 29 to 30 handle right here on the VIX, let me show you this. This is the line you're watching. If we get through that, the VIX absolutely explodes and leverage short vol will blow up. But these are the levels you want to watch here. So if the IWM can hold this trend line here, that's a positive for the market. And if the VIX stays below 29, that is also a positive for the market. The last thing you need to look at is the semiconductors. Can the semiconductors hold this 20 moving average? And, you know, really, even if they get through the 20 moving average, can they hold the 290 area? But if they start dumping out, there's going to be major problems. So those are the three things to pay attention to for next week. But with that said, I hope everyone had a wonderful holiday, a great rest of your weekend, and I will talk to you all next week.